Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now I do post these videos daily, so I highly encourage you to double check the latest videos on my channels, X and YouTube, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. Okay, so for Wednesday, July 17th at 8:30 a.m. we have housing starts as well as building permits. At 9 a.m. we have Richmond Fed President Tom Barkin speak. 9:15 we have industrial production as well as capacity utilization. At 9:35 a.m. we have Fed Governor Christopher Whaler speak, and at 2 p.m. we have Fed Beige Book. And then in terms of the technical portion, the Dow Jones and the S&P are showing more upside. The only thing is though, for the Nasdaq, it's still showing upside. I'm basing this off of the MAC lines. MAC lines indicate if there's a bearish or bullish movement. For example, you can see right here, it's showing bullish movement, more upside potentially. But this is more of the longer term, I believe, but I'll double check later. But either way, Dow Jones and S&P are showing more upside, and Nasdaq is showing more of a consolidation a little bit potentially, but then ultimately more upside too, but it's a little bit more of a slowdown. Like we saw, for example, you could see there is a difference. For example, SPY ETF for S&P 500 went up 0.59%, while the Nasdaq QQQ ETF for Nasdaq went up only 0.04%. So they're not in sync at the moment for the most part. Not necessarily in sync always, but in terms of being relatively close. But we'll see how it goes. Volatility index is still relatively low, I would say. It's at 13.2. And for the Dow Jones, I'm going to go over that first. So we had an upward trend resistance line dating back since 2021. I'll zoom out just to show you right here. 1, 2, 3, 4, and then this breaks down to additional fours. And if I go down to the 3-month, you can see you got 1, 2, 3, 4, the additional fours I was talking about. Not additional fours, but combined 4 total. And then you can see right about here, we had difficulties passing it, but we broke through and just spiked up. Now, the question is it going to come back down potentially? There is a small potential dip for the 1 month. If you see the 1 month, this is the bearish, it's in the bullish movement. But for the MAC line, it looks like it could dip down a little bit. And if it does, I think it would be pretty much to this zone. Now, mind you, we closed at 40,954 points. And if we were to dip down potentially a little bit, about 40,700 points, give or take. And then if you think it's going to go down even worse, I think this upward trend resistance line could hold as support potentially, and it kind of coincides with before and all that stuff in terms of the zone. You're looking at about 40,317 points, give or take. Now there is upward trend support level. I don't think we're going to see that anytime soon. I think it's more of these moving averages. So by the time we come down to that moving average, we'll move to that zone I gave about earlier. So basically 40,300 on the low side. And then this moving average, just in case if you want to see where it's at right now, it's about 40,260. Then the next zone I think would be pretty much from the previous all-time highs, about 40,000. When I checked, it's within a zone to about 40,050 to 40,150. And then the next moving average would be about 39,800. And the reason why that's kind of important is because it kind of hits a bunch of zones at the same time with the moving average. So you got resistance, somewhat support right here, and then resistance, and then collides with the moving average. And that's like, I would say generally, because I just drew a rough line, about 39,800 and something on the low end. But there's that. And then the next moving average is about 39,479 points, give it or take, or 39,500 actually, probably pretty much. So yeah, 39,500 give or take for the most part, especially by the time we meet the moving average. Now that's for the Dow Jones. To the upside, well, we would have to first hit 41,000. So we'll see if we end up passing the 41,000 price point. Maybe that's going to cause resistance and consolidation, even though more for the MAC line is showing more upside. So I think we're pretty much headed to the $42,000 price point. Are we going to hit there tomorrow? I don't necessarily think so right off the bat. I think it's going to be broken down if we head there pretty much at least 2 days of trading days, but we'll see. Now for the S&P 500, I'm going to be looking at the ETF SPY, which is just basically a different ratio, or it's the same, essentially same thing, just different ratio in terms of price points. But we closed at $564.86 and passed pretty much like hit the all-time highs from previously, and that was give or take about $564 and some change where we closed at basically. And the question is, if we were to come down, what kind of support levels could we be seeing? Because there is it's almost like the Dow Jones, same thing, even though it's more showing to upside, a small potential dip, so then the first level I think that could potentially hold us as support is about $563 and some change. And I'm basing that off of like potential resistance levels that we've had before with support levels. So resistance, maybe you could count the pre-market here, but I wouldn't. But resistance consolidation phase right here, somewhat resistance zone right here. So 563, will it hold? Not really, not necessarily 100%. And then you kind of almost see like an upward trend resistance line somewhere in this zone right here. Maybe not the cleanest, but you could kind of see something here, which probably will dip through anyway to the moving average, or the moving average will move closer to it or something. But you're looking at, 562 and some change on the high end for the moving average, and then the zone about 563 and some change. So that 563, 562 might hold. Now the next price point you could potentially see support is the 561 and some change based off the moving average. And you saw a massive consolidation zone right about here in terms of resistance, and then potentially support. So support, resistance kind of zone, support. And again, that's like 561 and some change. And then the next level is about 559 and some change. I believe the 560 personally would somewhat hold. The 559 would be more of a quick dip potentially. Just like we've seen, for example, right about here, it was about 558 a little bit. Actually, no, it's 551. Yeah, 559 and 1 cent, I guess, potentially. And then consolidation about 559. So it's a little bit of a 559, 560 zone kind of thing. We'll see. But the moving average is at 559 and some change. Will we go lower? I don't think so, because personally indications are pointing more to the upside. But we do have a channel of support right about here for sure. But I'll keep you guys updated on X and YouTube if we end up dipping way too low. Now to the upside, potentially we have pretty decent room to grow, because if you look at the S&P 500, closed at 5,672 points, and it, from what I checked, it looks like it's going to easily pass the $5,700 price point. So if that's the case, we're pretty much headed to 5,800 range, and that's over 2% jump. Now that's not going to happen one day, obviously, in trading day. It's possible, but I don't think 2% jump is going to happen one day. So it's going to probably be best case scenario broken down to at least 2 trading days. Now in terms of Nasdaq, so looking at QQQ, a little bit of a different story. It doesn't it's not by near the all-time highs that we saw. Like for example, S&P jumped 0.59, right, and Nasdaq jumped 0.04. So Nasdaq is showing more of a consolidation at the moment, potentially a drop too a little bit. Like to show you somewhat, MACD line 1 month arching down to the downside, even though it's in the bullish movement still, but it's pretty much arching down. The 3 month is pretty much, it was trying to cross over to a bullish movement, but pretty much got reaffirmed potentially to the bearish movement still. And then the 6 month, same story. It's trying to cross over to bullish, but got into the bearish. And then the different situation too is for the 1 year chart. So there's more longer term, and it is in the bearish movement as opposed to the S&P 500. S&P 500 is in the bullish movement, and it's quite strong actually too. Just to show some context, right about here. So here's the S&P/SPY ETF of S&P 500, and it's showing still more growth. That could be because, for example, if you look at the 5 year chart, I've shown this before in the past on my channel. This is a channel since 2010. So upward trend resistance line dating back since 2010. So resistance, all that stuff, et cetera, et cetera. The market was still going up, mind you. It's just, it wasn't necessarily passing the resistance level. And then you have upward trend support level. And then for like some major crashes at times, upward trend support level for the second level. Now, for the major crashes, there's only 2 touch points. So it's debatable if this is even an actual support level still. We have to have at least 3 touch points. But we have a lot more room to grow for the S&P 500 to the upward trend resistance line dating back since 2010. And the one thing I would be thinking is, so here's the QQQ ETF for Nasdaq, and we have this almost same thing, upward trend resistance line channel since 2010 as well. And we did have a false breakout since 2020 to 2022, and then came back down underneath it, and then tried to pass it, and we got knocked down. And then we've passed it as of recent, right? What I mean by recent is, here's the spike up through, and I believe inflation numbers came out that day or something, but pretty much as of June of 2024, so last month. The thing is though, I would think is potentially, does this mean that the tech sector might bring the markets down, right? The only thing is I wouldn't really think that, because there's been times that the Nasdaq broke through this channel right about here. So you can see in 2020 to 22 broke through the channel and market was going high. So just because it broke through doesn't mean that, and the indications for MACD line is pointing to the downside, that the market is going to be dragged down by the tech sector, because the tech sector seems to be strong. And I don't see any slowdown for the time being. For example, like Tesla, they have earnings next week, and seems like potentially is going to be going up to the upside. We got Nvidia just pretty much crushing numbers nonstop. Apple's constantly growing, so on and so forth. Microsoft, same thing. Actually, I'm not sure about Microsoft too much. Haven't kept an eye on it too much, but for the most part, the tech sector has been crushing it. So I don't anticipate a crash, even though the indication, I don't anticipate a crash, but I'm just saying in terms of the tech sector, I don't see any pull down yet. And regardless of the MACD lines pointing to the downside right now for the time being for the Nasdaq, I don't expect anything crazy. It just might be like more of a slowdown. Again, it's more showing consolidation from the way I'm interpreting it. The reason why is because the 3-month and the 6-month showing the same thing, potential crossover, but then went to the bearish movement. I think ultimately this is going to be a false bearish movement drop down where it's going to still curve back up and we're going to see a retest of the all-time highs, right? But that's just my opinion. This is all just for entertainment purposes, in my opinion, just to share and then keep myself updated at the same time too, because it does help me to do this every single day. And then I do trade the markets too, so there's that. Now, in terms of the levels, so first, in terms of the upside, let's just say we were to go to the upside. Again, I'm looking at QQQ, ETF for Nasdaq, closed at $496.34. And if we would go to the upside, first resistance level, I would assume is based off the moving average, about $497 and some change. Then the price point after that, I would be looking at, for the most part, is about $499, $500 price point, because you could pretty much see constantly somewhat, yeah, there's breakthroughs, but like pretty much major resistance levels within this zone right about here. And then you could probably count that as somewhat a support, but not really, I would say. But $499 to $500, essentially $500 price point. Then the next level could be, because it spiked up to $501 and some change. And then the next level is where's the consolidation, like all-time high zone, about 503 and some change. And then if you're very optimistic, 505 and some change. But this was during pre-market. But we've seen, for example, the S&P where it tested the all-time high during the pre-market, got a little bit knocked down, and then passed through it anyway. Now, to the downside in terms of support, it could be potentially within the same zone anyway, where we're at the moving average, and that's essentially about 495 and some change. Then the next zone I'm looking at pretty much is about the 494 and some change. And then within this area, we kind of collide with the moving average. So 491 and some change, and then this base right here, about 490 and some change. Will we go lower? It's possible, because it is pointing more to the downside. And then next zone I would assume would be about 486 and some change, which would be a hard drop. But I don't necessarily anticipate that, because we're leading up to Tesla's earnings coming up next week. So I think the markets might get pulled up a little bit, because essentially, since the Nasdaq is more of the tech sector, I see more consolidation personally. Regardless, like the MACD lines are showing downside, but it's not drastic downside. I think it's more consolidation and ultimately potentially going back up to test the all-time highs. But that's basically it for today's video. If you did find it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And consider subscribing so you'll be notified when I do upload the next videos on X and YouTube, because I do post these daily again. And again, please do your own due diligence and research before buying and selling, because this is just more for entertainment purposes and just sharing information. Thanks again for watching, and I'll see you guys in the next one. Take care. Peace.